In the new tax law, your bank can be forced to pay your tax for you, and included on that list is your customer, your tenant, and so on. The Lagos Internal Revenue Service released some memos a few days ago, dated 21st of January 2026. The title of those memos, the first one is Power of Substitution pursuant to Section 60 of the Nigerian Tax Administration Act of 2025. And the second memo, Assignment of Outstanding Tax Debt for Collection from Third Parties pursuant to Section 68 of the Nigerian Tax Administration Act of 2025. These acts give LIRS the right called the Power of Substitution. Calm down, let me summarize the letters for you in simple terms and I will explain, I promise. Under the Nigerian Tax Administration Act 2025, Lagos State Internal Revenue Service has been given one of the strongest tax recovery tools ever created in Nigerian law. It is called the Power of Substitution. It means if you owe tax and you refuse to pay, after the tax has been properly assessed and has become final and due, LIRS does not have to keep chasing you directly. The law allows LIRS to go to anyone that is owing your money or owes you money and instruct them to pay your tax from the money. Yes. This power comes from Section 60 of the Nigerian Tax Administration Act of 2025. So, who can LIRS legally issue a substitution order to? Once your tax is established and overdue, LIRS can issue a substitution notice to any of the following people or institutions: your bank, your employer, tenants, your customers, and your debtors. In fact, your agents or business partners can also be sent a letter. Anyone that is holding money for you or anyone that owes you money now or in the future. So if you are a landlord and your tenant pays you rent, LIRS can now legally instruct your tenant to send your rent to LIRS instead of you. If you are a contractor and the company owes you money, LIRS can instruct that company to pay them instead of paying you. So if you have money in the bank, LIRS can also instruct your bank to remit part or all of your money to settle your tax. What happens when a substitution notice is issued? Once LIRS serves a substitution notice, the person or institution that receives it has no discretion. The law makes it compulsory and is binding. They must first withhold the amount stated, pay it to LIRS within the stated time, provide proof of compliance through the LIRS e-tax platform. At that point, the money legally stops being yours. It becomes tax payment. The law even says that once the remittance is made, your tax is considered paid to that extent. So what if the third party refuses to comply? This is where the law becomes extremely powerful. If a bank, employer, tenant, customer or business partner ignores a substitution notice, the law treats them as if they are now the taxpayer. Voila. They become liable to pay the full amount in the notice as their own tax, pay penalties and interest, or face enforcement actions including distraint. They could also face possible prosecution. So a customer who refuses to pay your tax on your behalf can suddenly become the debtor instead of you. So you may ask, can the person served object? Yes, but it must be done properly. The person served has 30 days to object in writing, stating clearly the grounds of objection. The law treats substitution notices like tax assessments and allows appeals using normal tax dispute process. But until an objection succeeds, the notice still stands. However, your liability does not disappear. Even after substitution, you are not fully off the hook. If the money recovered from your bank, customers or partners is not enough, you still hold the balance. LIRS can continue to enforce until everything is cleared. Now, how does this link to debt recovery agents and further enforcement? Now, this is how it links to debt recovery agents and further enforcement. Under Section 68 of the same law, LIRS can also appoint a debt recovery agent to pursue the unpaid taxes through third parties, including banks and businesses. And even when substitution or agents are used, LIRS still retains full enforcement powers, including issuing a new substitution order, garnishing proceedings, distraint, prosecution. So substitution is not the final step. It is one of the many tools. So what does this mean for business owners and individuals? This law completely changes tax risk. You can no longer hide behind cash flow, slow customers, or unpaid invoices. If money is moving to you through banks, clients, tenants, employers, partners, LIRS can intercept it. The safest tax strategy in 2026 and beyond is simple. File correctly, pay on time, clear disputes early. Because once substitution starts, you lose control over your income. Don't say I didn't inform you.